Good morning, investors. You are now on KleverStock with me, Ainun Jaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. The FPM KLCI opened cautiously higher this morning, inching up 0.93 points to 1,593.8 as investors selectively picked up shares during the corporate results season. Sentiment, however, remains subdued ahead of the weekend, with markets awaiting U.S. Federal Reserve Chair Jerome Powell's speech at the Jackson Hole Symposium for cues on interest rate policy. Rakuten Trade noted that local institutional buying is helping support the market. We are indeed heartened by the solid support from the local funds thus far, rendering them taking the lead within the local bourse. For today, we expect the index to hover between the 1,590 to 1,600 range, hopefully and beyond. This was said by the research firm in a note. Among the early gainers, Maxis rose 5 cents to 3 ringgit and 51 following its positive results announcement. Sunway added 6 cents to 4 ringgit and 81. Tenaga Nasional climbed 6 cents to 13 ringgit 70 cents, and PPB advanced 17 cents to 8 ringgit and 87 cents. Maybank gained 9 cents to 9 ringgit 87 cents, while Mbank improved 6 cents to 5 ringgit and 56 cents. On the active list, Widad slipped half a cent to 1.5 cent. Ivory Properties slid 1.5 cent to half a cent, while SFP Technology inched up half a cent to 16 cents. We should now look at the performance of our local currency. The ringgit opened stronger this morning against the US dollar and a basket of major currencies as investors looked ahead to key policy signals from the US Federal Reserve at its Jackson Hole Economic Policy Symposium later tonight. At 8 a.m., the local note stood at 4.2200 or 4.2400 against the greenback, firmer than yesterday's close of 4.2235 or 4.2275. Muamalat Malaysia Chief Economist Dr. Muhammad Nizam Abdul Rashid said the market's focus is squarely on Fed Chair Jerome Powell's speech. The ringgit appreciated against US dollar by 0.04% yesterday. Hence, we expect the ringgit versus the US dollar to remain in a narrow range between 4.22 and 4.23 today, as traders and investors await the latest assessment by the Fed chairman tonight. Meanwhile, the US dollar index was up 0.41% at 98.619, supported by stronger business sentiment. The US Flash Composite PMI rose to an 8-month high of 55.4, reflecting continued growth in services and improved manufacturing activity. However, Dr. Nizam noted the survey also showed higher import tariffs are pushing up costs, with most businesses planning to pass those on to consumers. At the open, the ringgit also strengthened against other major currencies. It rose against the British pound to 5.6616 or 5.6884, edged higher against Japanese yen at 2.8431 or 2.8568, and gained against the euro at 4.8998 or 4.9231. Now, the local note also advanced against regional peers. It traded at 3.2741 or 3.2899 against the Singapore dollar, 12.9139 or 12.9822 versus the Thai baht, and 259 or 260.4 against the Indonesian rupiah. The ringgit was flat only against Philippine peso at 7.40 or 7.44. And now moving on to economic updates. Coconut oil has surged from Asia's kitchens to the global commodity spotlight, cementing its reputation as one of the hottest and most premium agricultural products in the world. Prices are breaking records, climbing as high as 423,000 rupees per metric ton in India. That's about $4,840, nearly tripling in less than 2 years. Globally, benchmarks have soared to an unprecedented $2,990 per ton, driven by aging plantations, climate shocks, chronic underinvestment, and booming demand from food, beverage, and personal care industries. Dato Dr. Mat Nasir Shamsuddin of Putra Business School says that the rally is reshaping global trade flows and pushing coconut oil into a strategic commodity status. The battle for dominance in edible oils has entered a new and volatile phase. He warned this while noting that many buyers are being forced to turn to cheaper substitutes like palm kernel, soybean, sunflower, and palm oil. Malaysia's coconut industry may be modest compared to palm oil, with just 85,400 hectares under cultivation in 2023 and a production volume of 464,000 tons. Mat Nasir sees promise in the previous segment, especially virgin, organic, and cosmetic grade oils. He pointed out that while coconut production is projected to decline by 6.11% by 2028, market demand for value-added products continues to grow. The strongest potential lies in the production of extra virgin coconut oil and other high-value products. He said this while stressing the need for sustainability, branding, innovation, and private sector investment. Bank Muamarat Chief Economist Dr. Muhammad Azanizam Abdul Rashid described the surge as a wake-up call for Malaysia. This is where economic complexities comes to play, where the agriculture sector will become a driver of economic growth. He argued that diversifying away from crude palm oil could reduce Malaysia's dependence on a single commodity, noting that the country's agri-food trade deficit has ballooned from just 1.1 billion ringgit in 1990 to 39.3 billion ringgit in 2024. Now, globally, coconut oil production has stagnated at 3.67 million tons for decades. Weather disruption, younger nut harvesting for coconut water, and underinvestment have tightened supplies. Now, according to Reuters, the international coconut community expects prices to hold between $2,500 and $2,700 per ton in the second half of 2025, with little chance of retreating below 2,000. Coconut oil carries a staggering premium of $1,000 per ton over palm kernel oil, compared to the usual 100 to 200. Indonesia, the world's top supplier, saw coconut oil exports drop 15% in the first half of 2025 as farmers shifted to selling whole coconuts and desiccated products, which jumped 58%. Some industry groups are even calling for Jakarta to suspend exports for up to a year to stabilize prices. Meanwhile, in India, the biggest consumer trade associations are urging policymakers to relax import rules, despite duties exceeding 100%. For Malaysia, the opportunity lies in capturing a premium niche, strengthening refining capacity, and expanding into global export markets. Now, as Dr. Mat Nasir concluded, to transform coconut oil into a new growth pillar, Malaysia must scale up production, enhance value chain development, and design forward-looking policies that encourage innovation, sustainability, and private sector investment. And now moving on to corporate news update. And Preserve Group Berhad has officially secured its first entry into the aviation vehicle maintenance sector after its wholly owned subsidiary and Preserve Malaysia won a 2-year contract from Petronas Dagangan Berhad. The deal, effective September 1st, 2025, covers the preventive and corrective maintenance of aviation refueling vehicles at airports across Peninsular Malaysia, excluding Kuala Lumpur International Airport. In its filing with Bursa Malaysia, the company stated that the contract value will be based on work orders issued throughout the 2-year period. And Preserve highlighted that the award comes just weeks after its debut on the ACE market, signaling strong momentum in its growth plans. The group is broadening its service offerings and expanding its operational assets to cater to the increasing demand from the oil and gas and petrochemical sectors and now the aviation sector. The strategic expansion underscores the group's capabilities in meeting the most stringent safety and operational requirements. The statement also said that while the company noted that the contract will not have a material effect on its net assets or gearing for the financial year extending December 31st, 2025, it is expected to contribute positively to group earnings over the duration of the agreement. This move marks a significant step for Enproserve as it diversifies beyond its traditional oil and gas portfolio into the highly regulated aviation sector. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Binastra Corp Berhad has secured a 132 million ringgit contract from Axism Lumba Kuda Sdn Berhad to carry out planning works for a new 63-story service apartment project in Johor Bahru. Sita Global Berhad's wholly owned subsidiary, Sita Global Land Sdn Berhad, has secured a 168.9 million ringgit contract with the Public Works Department for the FT3 Road Upgrade Project. And next, Bursa Malaysia Berhad has rejected PN17 company Ivory Properties Group Berhad's application for a further extension of time to submit its regularization plan. Hence, its securities will be suspended effective August 29, and the company will be delisted on September 3rd unless an appeal is submitted. And Enproserve Group Berhad has secured a 2-year contract from Petronas Dagangan Berhad to maintain aviation refueling vehicles, marking its entry into the aviation vehicle maintenance sector. And last but not least, MN Holdings Berhad is seeking to raise up to 95.9 million ringgit throughout a private placement of up to 10% of its enlarged share base for working capital. Well, that's a wrap for more development updates with me, Anujarya on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.